What's up, my people? This is Blue Bull Forex, and guys, I welcome you once again to another powerful video in this Insight Empire. Today we're gonna be showing you the step-by-step guide to how we have been able to secure a trade literally from as little as $100 all the way to $1,200 trading XAUUSD, which is basically asset, which is basically the gold forex metal gold XAUUSD. That is what we have been trading this particular day. So we're going to show you a step-by-step guide how we have been able to come up with that particular entry and how we have applied our risk management. And this, I hope this will guide you next time in case you want to replicate the same trading strategy. You can be able to trade from it. All right, so without much ado, let's dive straight to the charts. And before we go to the charts, remember also to tap on that particular subscribe button, and also remember that I have attached down there the link to my Telegram channel that you are going to join. That particular Telegram channel is completely free, and you can interact with other traders, and also that is where I post some insights, and also I share some setups completely for free. So feel free to join that particular Telegram channel because it's completely free and it's made to help you and to guide you as a trader who is just getting to the forex market, or you have been in the forex market but not yet profitable enough. All right, so without much ado, let's dive straight to the chart. So what did we say here? All right, we have had a very a powerful price action printing out. We began our analysis from H1. This is a 1 hour time frame, and as you can see, we had marked out this particular fair value gap. Fair value gap is an imbalance in price delivery. These are some of the things that I will be teaching you later as we continue. So this was a fair value gap, but the market already reacted to the fair value gap. As you can see, it's already mitigated, but still we believed that this particular fair value gap has more potential and it was not fully mitigated. And that is because when you shift to a smaller time frame, because basically what we are talking about today in this particular strategy is fair value gap in a fair value gap, all right, or a fair value gap in a fair value gap. There is a difference, a very big difference between a fair value gap in a fair value gap and basically what we call the balanced price range, because we have BPR, which is also a strategy relying on two fair value gap but in the same zone, and this particular approach, which is having a multi-time frame analysis where probably you're looking for AVGs of any other institutional reference point, probably from a bigger time frame, and then narrowing your scope to a smaller time frame to be able to execute trades from that particular end. So what we had here was a bigger time frame, a fair value gap in the H1, and then we narrowed our scope down to 15 minutes time frame. All right, basically it should be a time frame which is 2 times smaller. Then we came to 15 minutes time frame. What can you see here is basically another fair value gap in the 15 minutes time frame, and so we marked out now the smaller time frame in the 15 minutes time frame, which basically should be within the big time frame fair value gap, which is in the H1 time frame. All right, so you must do 2 things here. Number 1, spot a big time frame fair value gap, maybe from H4, then narrow down to a time frame 2 times smaller. All right, so if you spot your big fair value gap at 4 hour time frame, we expect you to bounce the 2 hours time frame, the 1 hour time frame, and probably execute your trade in the 30 minutes time frame. So for our case, we spotted our entry at H1, so we have skipped the H1, the 30 minutes, and that is where we are looking for our entry basically in the 15 minutes time frame. So in the 15 minutes time frame, you need to spot another fair value gap. All right, in the 15 minutes time frame, you need to spot another smaller fair value gap within that particular zone, and this particular fair value gap becomes your point of interest. So as the market came and tapped this particular fair value gap, here is where we entered this particular market, and then we had our stop loss basically just below this particular demand over here, because we were very confident that probably this market is likely to retrace from that particular AVG, which is basically a balanced price range. And as you can see, the market has retraced from this particular end, and this is how we have been able to secure so far so good. We are at around 128 pips profit, but our target is basically 150 pips. And how much were we risking? We were risking how many pips are here in? We were risking 40 pips for 150 pips. So that is basically 1:1. That is 1:3.1 risk to reward ratio, which is pretty fair enough. Guys, I always tell you, In whatever you do, make sure that you have a good risk to reward ratio, at least 1:3, 1:2, 1:4. Make sure always you are risking something smaller than what you are targeting to make in the forex market. Always remember, in forex market is not how many trades you won, it's about how much do you make when you are right and how little do you lose when you are wrong. All right, this is Blue Ball Forex. I'll be back with more and more videos of this kind. Remember to hit on the subscribe button. That is the only way you can be able to support this particular channel and also to motivate me to do more and more of this kind of educative information. Thank you.